where is my career going? What is the impact of my life? The entire industry in India in wealth management is quite broken. The entire industry is about pushing products into a client portfolio. It's not about the pull. Indians don't pay fees. I think that was the line I kept on hearing. Will take you through good days and bad days of your entrepreneurial journey is that word believe in your life. You were born for a reason. Right? Make it count. When you see some of the larger family offices globally, they're all actually structured to become large fund managers. The family office becomes that identity. I'm very excited about AI. It'll disrupt the way we work. Right now, we are flooded with intelligence, but wealth management also needs wisdom and judgment.
What is a family office? Hi, welcome to the VWP. Today, I'm very pleased to welcome Soumya Rajan to our podcast. Soumya is the founder and CEO of Waterfield Advisors, and over the last decade or so, she's interacted with some of India's most respected business houses and helped them think through wealth, not just from the lens of capital, but from legacy, responsibility, and impact creation. Such a pleasure and honor to be in conversation with you, Soumya. Thank you so much.
Thank you so much, Vilasni. It's a real pleasure to be here with you today.
Thank you. And, when I first got this opportunity and, when I was thinking how I should start this conversation, for me, at least, it is all about how you started Waterfield and when you started it. You were at Stancy, you were doing well, and it was also about in your 40s that you started. Can you just take us through?
Yeah, that was the year I had just turned 40, Vilasni, and I think for me, you kind of ask yourself some fairly deep questions about where is my career going, what is the impact of my life, and I found myself asking those questions at that turning point. I was leading the private bank of Standard Chartered at that time. I got the role at the age of 38, and this was just 2 years before global financial crisis hit at that time. What I was also seeing at that time is that there was a lot of discontentment with financial services and banks because of the GFC. So you found that a lot of families, clients were unhappy with the way in which they were advised. And I was reading all about this in Standard Chartered, and I was saying, oh my goodness, this is going to happen in India as well. And I just got the sense that the entire industry in India in wealth management is quite broken. It's basically all about distribution. You're incentivized by the commissions that you get paid by the product manufacturer. There is a misalignment of interest to the client. The entire industry is about pushing products into a client portfolio. It's not about the pull. And I said, well, GFC is happening on the one side. The distribution industry seems to be thriving in India, but there has to be a better way, which is better aligned for clients. So that was when, just the early seeds of germination in terms of what I wanted to build and say advisory is the right way. But at that time, we never had regulation to support it.
You said, when I kind of listened to a couple of your interviews, and you say that there were a lot of naysayers at that point of time, saying that this was ahead of time, or this is, or India's not going to pay for advisory, right? So how did you, when people say that to you, how did you still go ahead and build it against the grain?
Great question. I think for me, it was about you had to do the right thing by the client. And if your North Star is that, then you build everything around that. So for me, and the naysayers were many. Indians don't pay fees. I think that was the line I kept on hearing to everyone that I went to. And I will say that the regulation at that time also was not fully supportive because you had distribution, you still didn't have advisory. If you went to pitch advisory, clients ended up paying 2 layers of fees. So there really wasn't a business model. I was quite
Understood.
idyllic, thinking that clients would be very willing, but just the economics for them wouldn't work. And I almost shut the company 1 year within launching the company because I thought that this is not going to work. And then because the regulation changed, it meant that we had a business model. And for me, that then meant that, okay, if I have a viable business model, I'm going to prove the naysayers wrong. And maybe it's a perverse kind of sensibility that the moment somebody tells you it's not going to work, you just kind of will yourself to say, I am going to prove them wrong. So you want to say that I believe in this, and therefore I think this is going to work irrespective, and I'm going to make it work. And once you convince yourself that you're going to make it work, then the barriers fall away, and you will yourself to move forward.
That's so powerful, Soumya, because that actually requires a lot of internal work, right?
Yeah.
On conviction, on courage, on staying the course. Interesting, you mentioned regulation twice. So, you know, what was it that actually drove the change in regulation in that period?
I think it was actually the global financial crisis. The fact that post that, for instance, you had the UK regulation that changed from distribution to advisory completely. The US still had distribution and advisory. And today, for instance, advisory is 60% of the US wealth management, whereas in India today, it's not more than about 15%. So when you think about if the US is at 60%, the UK is at 100%, and advisory is just beginning to come through in India, then we have a long way to go.
So it's a green
And
field.
so it is really about the scale of opportunity which is there for India, which kind of led me to think that this is something that I do want to build. But it's also about building the right way, and also building, knowing that you can sleep well at night.
Absolutely.
And if you don't have that, then how do you build? So for me, that was very important.
So, Soumya, you were at the bank for a long time in Stancy. So, when you joined right after college, is
So
that
I
how?
finished, so I finished a degree in mathematics, first from St. Stephen's in Delhi. I got a scholarship to study at Oxford. Went to Oxford, had 5 years of maths, and decided that I needed to apply those skills to the real world. So came back and joined a bank. This was ANZ Grindlays.
Right.
Joined them as a management trainee.
Right.
And both my parents were bankers. So it felt like, well, let me give it a try. Let me give it a shot. I loved it. I just loved being in the real world. And spent 17 years with the bank.
Wow.
Standard Chartered took over Grindlays, acquired it. But I just actually continued with the organization, because what was very interesting at that time is that when Standard Chartered took over, the entire senior management of Grindlays kind of moved out. So, and Grindlays was actually much larger than Standard Chartered. So you found that all the middle managers suddenly had opportunity. So I kind of seized a bit of that opportunity and said that let me throw my hat into the ring in some of these interesting jobs that have come up. And I didn't look back after that.
Beautiful. Some early mentors, anybody in that time frame?
Many mentors. But I think the one who really changed the trajectory of my career was the group chief executive of Standard Chartered, a gentleman called Mervyn Davis. Mervyn happened to be visiting India on a visit, and I was at that time the branch manager of our branch at Breach Candy, the Standard Chartered branch there. And Mervyn came into the branch. He was being taken around. Like you would also be familiar with Asli, how it happens in financial service companies. Senior executives are taken around to branches and to meet customers and stuff. And Mervyn kind of saw what I had created in the branch. He got a very positive feeling about the energy, about the clients. He spoke to clients, he spoke to staff. And then he invited me for a leadership meeting in Kuala Lumpur about a few months later. And in Kuala Lumpur, I had a bunch of senior leadership members of Stanchart invite me to take up a job internationally. And when he spoke to me, when I met him at that leadership meeting, he actually said that, you're never going to be a complete banker unless you do credit and risk. So he plucked me out of India, literally, and sent me to Singapore. And the job that I got there was the head of collections.
I'm warming up to this.
For Standard Chartered for Asia Pacific. And I didn't know how to collect. I'd only dealt with people who had money. I never dealt with somebody who didn't have money. And
in a market that you're not familiar with.
Totally unfamiliar. So I was sent off on the first day that I landed in Singapore to go and actually make calls to clients who were not paying. And that was such a realization for me. I think a lot of what subsequently shaped my thinking around risk was really around those early days, and to have an appreciation for risk as well. I spent 5 years in credit, and then I moved back into private banking after that. But I will say that those years were very formative. And Marvin, of course, changed the direction of my career because it took me to Singapore. I spent 5 years in credit, but the people who I met in Singapore were really individuals who were heading the private bank for Stanchart subsequently. And then when an opening came up in India, pulled me into the India team there. So it was, and then everything happened very quickly. So it was
so lovely to hear. I think the bank kind of, any of these multinationals kind of enable some of these growth opportunities, identify those talents.
And I think Indian companies are warming up to that now. But these companies had those processes in place 20 years ago.
I know.
And that's really what I think we could learn from many of these multinationals, of how you identify talent and how you groom talent and make sure that they get enough exposure so that they're ready for the leadership roles in subsequent years.
Absolutely. Yeah. In a very unsaid manner, they built
absolutely.
Indian leadership.
Absolutely. And I don't think ever, and I hear so many people talk about gender biases, in that they may have confronted. I never felt ever a gender bias in an organization like Standard Chartered. It was like it was completely merit based and your competency. And I think growing up from a professional sense in that kind of environment is very enriching.
Absolutely. I hear you completely. Coming back to Waterfield, Soumya, interesting that you have 4 cohorts. I mean, that's my understanding. One of the legacy businesses, one of the founders, one for women, and the other for the professionals, right? So how did you think of it from that perspective? And
So when I was thinking through wealth management in India, everyone always looks at a client through the lens of their assets. So they'll say, if you have more than 1 crore, you're this. If you're more than 10 crores, you are this. If you're more than 100, you are this. And they look at you through the lens of the assets that you have. My belief is that we need to look at it differently. We need to look at it through the lens of the individual and who are they representing. So for me, we looked at our clients through the lens of not how much their assets were with us, but with, are they family businesses? Are they founders? Are they women? Are they professionals? Because every one of these cohorts has a different requirement. When you are a family business, you're thinking about preserving the wealth. You're thinking about succession. You're thinking about family governance. You're thinking about legacy. When you're a founder, you're thinking about how do I monetize my business? How do I create wealth for myself? How do I make sure I have the right taxation in the right investment vehicles? I'm thinking about, do I have the right co-founders? Do I have the right team? How do I influence my circle of influence later? How do I give back to the ecosystem that's nurtured me? So it's a very different set of questions there.
Yeah.
When you look at women, it's about women who want to be investors, who've been very good savers, but are on an investing journey, who are looking at building up their confidence in wealth management to invest, who have a different set of priorities because they're multitasking at different levels. Literacy is important, community is important, wealth with a purpose is important, philanthropy is important. When you look at professionals, it's aspirational. They have wealth, they think about their next gen, they want to make sure that their next gen are well provided for, that they have educational opportunities that enable them to do more. They're also very time poor, and therefore they need help from someone who's going to look after their interests, irrespective of what they're doing in their day jobs. So what I realized is that every one of these constituents needs a different kind of wealth management.
Absolutely.
Whereas India doesn't cater to that.
Absolutely.
So it was important for a firm to look at them through the lens of who they are and their identity, rather than saying, I have 1 crore or 10 crores or 100, because what's actually driving their behavior is who they are in terms of their
aspirations
and their unique challenges and opportunities that come from who they are.
Beautiful.
So that was the thinking
Soumya.
around how we have built Waterfield.
Yeah.
And that's how we will stay.
Breaks a lot of stereotypes. So that's
Completely.
very interesting.
It's a very different take on wealth management, because most others will say you're siloed into, I have 100 crores and therefore.
And I know in the real world of people getting stifled by that
of course,
sort of an approach.
And we want to break that. And we think that there's merit in looking at clients through a different lens.
More power to you on that. For the benefit of our audience, right? We use family office, and I think that's a term that's building currently. Yes. But what is a family office?
So great question. I will say that I've been asked that question many times because, there are all kinds of different connotations that people have about what is a family office.
Yeah.
Simple way to understand it, it is in some ways a group of professionals who will look after the interests of a family. It could be one family, it could be multiple families, but it is a group of professionals who has the interests of the family at the end of the day.
Understood.
And when you say interests of the family, you then say, you look at it not just through the lens of investments, because investments is just one part. And my own definition of wealth management is quite different from what may be the layman's definition. Most times you equate wealth management to investment management. I believe that it's much more holistic. You have to look at family governance. You have to look at the right investment vehicles through which you invest. You have to look at tax planning, succession planning. You have to look at how do you manage a household. Because for a lot of times, when you set up a family office, you normally set it up when you've had a liquidity event. And the liquidity event has meant that the family has actually come out of the business. So I also feel the family office then becomes the identity for that family. Because for many family businesses, they are associated with their brand. So the moment they sell that brand or the company, that brand is no longer something that they can associate with.
Absolutely.
The family office becomes that identity, becomes the repository of the family values, becomes the repository of who they stand for. So you end up seeing this family office as more than just, again, maybe more than just a group of individuals. It is the identity as they transition into what they're going to do next. And of course, philanthropy, because again, it's about the legacy. It's about how do those family values get translated into strategic philanthropy and the legacy of what the family stands for. So Or
Wow,
these are the areas of the family office.
quite deep, I must say, Soumya. you know,
Yes.
I think, yeah, because we use that word quite often in the
Yeah.
world today, but I think it's hugely misconstrued in
It
many
is.
people's mind, including mine. I mean, thank you for that
okay,
explanation.
good, because I actually think it's much deeper. It's what's really interesting when you meet a family who's gone through a sale of their business. It's quite it's a very difficult time for the family. Most
Wow.
people look at it through the outside world to say, hey, they've got so much money, right? But they don't realize that what's much more deep and what impacts the family is what next.
It's the identity. I mean,
It's
it's
the
just
identity.
complete breakdown.
It's a breakdown of their identity completely.
Mm.
So solving for that is actually what I feel institutions like ours try to do.
So, Soumya, over the period of, I think, 15 years of your existence, you have about 375 clients and USD 5 billion, if I'm not mistaken, AUM,
Yes,
right?
yeah.
Isn't that significant?
Yeah, I'm very proud.
Yeah.
I have a great team.
Congratulations.
Thank you.
Congratulations on that. But, I'm going to pick your brain here because you mentioned in one conversation that this actually is a very small number when you look at it from a global standpoint. India itself is a very small cohort.
Yeah.
Can you just give some perspective around that?
Yeah, just to give some sense of the context. In 2018, India had about 45 family offices. Today we have, or rather, I think 2024, there were about 300 plus. If you look at the kind of assets that's managed by this 300, it's probably around 30 billion. Whereas the size in the global context of family offices is 6 trillion. So we are a speck in the larger
But
context.
5 on 30 billion is great, Soumya.
It's good. It's great.
I know. I completely understand that we respect.
But I do feel that. But again, maybe 5 you need to also look at in the context of the larger wealth management industry. So if you look at, 30 billion is what family offices manage.
Right.
Whereas you're looking at the larger wealth spectrum is close to about, maybe, I think we'd have, I would say the top 1% of India probably has financial assets of about 2.7 trillion, which is huge.
Understood.
Right? So in that context, in India, we are a speck. But I think in the global context, family offices in India is still a speck in the global forum.
But you see this fast growing?
I see this actually changing. And when we look at the kind of financialization of assets, my sense is that over the next 5 years, you'll have close to about $1 trillion, which is going to come into financial assets. Just by way of some small statistics which are relevant, is that we are very similar to what the US looked like in the early 1980s in terms of its financial markets. They had about 3.5 trillion in financial assets. If you look at India today, we're around that 4.5 trillion mark. That today, in terms of, let's say, the penetration of financial assets, or what has created the wealth in the US, has really been financialization of the assets for households. So today, most households would have capital market assets of close to about 58%. Whereas in India today, that's only 13. 1-3.
Okay.
So as more people participate in capital markets, it means that their wealth will also grow with the growth of the country. Because today, if India's GDP is at 7%, given that your large caps will grow at maybe 3 to 4% more, your equity markets itself should give you about 10 to 11% with your eyes closed. You don't have to do much to just get that. Put that money into an index and you should get that over a period of time. So that in itself means that the financialization of assets is key for wealth in India itself to grow. But when I look at, and this is just broadly wealth management and just participation of more individuals in this. But if you look at family offices, they're also going to get bigger.
Yeah.
And if you look at how money is kind of double, you normally say money doubles in 7 years, right? So if you were to say that these family offices, which are today on average 100, 200 million, in 5 years' time, given how they invest, they will be double that.
Understood.
Which means that they have agency to be able to do more. But their doing more is actually going to come about through how they potentially become very large fund managers in their own right. So when you see some of the larger family offices globally, they're all actually structured to become large fund managers. So classic example, which I've given in other shows that I've done, is around podcasts, is around General Atlantic.
Yeah.
You had Chuck Feeney, who created Atlantic Philanthropies, and he would, and his family office arm created the venture arm, which is General Atlantic today, which manages about 85 billion. Now, India, we're just at the cusp of that. So all these family offices that you see, this 300, in some ways, I feel have the potential to become very large fund managers within the next 20, 30, 40 years and participate in growing the entrepreneurial ecosystem in India.
Lovely. Can I just bring you back and ask you, what is if a financial asset? So if India is not saving in a financial asset, where is it that it is parked today?
Oh, so India was very dominant in bank fixed deposits, insurance, real estate, and gold. Right? This is where most of the money sits. But if that money moves to capital markets, then the other thing it does is that it actually supports capital formation.
Great. You mentioned, Soumya, that a lot of these legacy businesses will become large fund houses, or and we can see pieces of that already happening in the country. At least I've heard that the second generation, third generation are happier investing the money and managing it than running the operational business itself. So do you see this play out? And my question is, what happens to the operation business, or is it okay for it to get balanced out this way?
So I think I think maybe I would actually say that it's not a bad thing, because if your heart's not in it, then better to exit. Use the capital that you have for agency to invest in other entrepreneurs who need the capital and support the economic growth through being a fund manager. Because I think there are enough new entrepreneurs coming into the system so that you don't have a lack of entrepreneurs. I don't think India will lack entrepreneurs. I think that's just right now getting unleashed. So to that extent, if there are family businesses that want to exit, then I think either they become fund managers, which they will. But the other interesting place is really that in private equity, you have the concept of the buyout private equity firms. And I think that will become a very interesting space in India, because 70% of our businesses are family-owned businesses. And in family-owned businesses, there may not be an interest to really continue with the existing operating company. So by bringing in having the buyout firms come in, it takes out the family. The company still brings in professionals. The company still continues, but not with the family. Family in turn has got its money and channelizing that financial capital elsewhere to maybe support other entrepreneurs.
Understood.
So it's just a question of, I think it's how the design may change in terms of the capital. The capital will still be put to good use and
so there will be prudence in the utilization of this.
Not just prudence, I think it'll spawn a new set of people and investors, which was not there before.
Not existent earlier.
In India, I don't think we have too many buyout firms. Whereas it's a trend which we see right now in Japan. Japan is an aging population. Family businesses are not able to have the next generation come into the business. It's a thriving buyout private equity market. I foresee that within the next 10 or 15 years, the same will happen to India as well.
Interesting. Wow, that quick.
I think so.
Okay.
That quick.
Coming to the founder population, right? So their mentality is going to be hugely different
Yes.
to the legacy.
Yes.
So some flavor that you want to share over there
On founders?
on founders, especially I'll tell you, because if they've got success in one venture and they have money that they've made, they want to become serial entrepreneurs. They don't want to invest in traditional instruments. They want to do more with their wealth, money, capital.
So I think the main definition of a founder for me is risk taker, right? So the founder fundamentally is a risk taker. So, but you have two different types of founders. You'll have founders who will say, I am a risk taker in my business. I will not be a risk taker in my wealth. And say that I take enough risk in my business and therefore I do not need to take risk in my wealth management. So that's quite common because they work very hard to get the capital. They then want to make sure that that's preserved for subsequent generations. At the same time, the founder mentality is also to how do I give back to the ecosystem that nurtured me? So if I have been the recipient of venture capital or private equity, then that capital has enabled me to grow and scale my business. How do I support other entrepreneurs as well? So the mentality also isn't just restricted to capital. You'll find many founders are willing to give their time because it's about mentoring. It's about mentoring younger companies, realizing that you don't want them to make the same mistakes as you did, and you can also give them a little bit of your guidance, knowledge.
Experience.
So I would say that founders come in these two forms broadly, but they are fundamentally risk takers. But they will take risks in business, not necessarily in wealth.
In wealth. Okay, that's a huge shift.
But they will support other entrepreneurs. So they will give
support
venture capital, they will give private equity, and that could be a zero one game. So either I make money or I lose money. But they will still support the ecosystem because that's how they're wired. Because someone else gave them a break. So it's almost like paying it forward. It's the same thing, same concept. Operates in this founder network.
Founder network. Very, very interesting. So, you work so closely with this community and you have an insider view on how wealth gets created, Do you think there is a secret code?
But if I was to think of, success in the broader sense of what I think makes people successful, for me, there's the one word, which is belief. I was recently seeing this OTT called Ted Lasso on Apple TV. And, so the Ted Lasso is about, he's an American soccer coach that goes to train and manage a British football club. And one of the first things he does as a coach is that he takes a chart paper on which he writes the word believe and he sticks it on top of the door. And then every time the team goes out, they all kind of put their hand up, touch believe, and then they kind of go out to play. And I realized that that's probably the one thing, if I had to say, will take you through good days and bad days of your entrepreneurial journey, is that word believe. And belief doesn't come just from, it'll get done or otherwise. It's about also your own self-worth. It's also about your own confidence. And it's about being able to inspire others and get your team to also believe because it's a cause. It's almost like,
Yeah, it's a
I call it
cause. I mean, I
missionary
can-
zeal in some
Yeah.
ways, you know.
Right.
But ultimately, I feel that ultimately does differentiate. It does see you through. Because success also, however way you define it, is not linear. It is asymmetric, and it goes up and down.
Yeah.
So, but the one thing which is constant is belief. So, if I was to think, at least from my own personal point of view, if that's really what has enabled me to do what I've wanted to do, it's been belief.
Success, when you say, is measured differently. So you essentially cut out the external noises,
Yeah.
and you just focus on
Yeah.
what you have set out to do.
Truly believe that the impact that you're making is genuinely there.
Yeah. Hear you. This the other thing that impressed me a lot was Soumya, that you want to build a company that's going to stay longer. It's going to outlive you in that. So that's. I really wish every founder thought that way. Honestly, I think in this world that we live, the quick exits, the cutting corners. So what were some of the decisions that you had to make from that lens?
I will maybe just disagree a little bit with you on one small comment, Vilasi. I think every founder, when they starts with the intention of building the company to last. I don't think every founder comes in with the idea that I will sell. I fundamentally feel that when you're building something, you think about how is my idea or product or solution going to change the world? Or at least as a founder, you think about changing the world. I mean, that's why you become a founder. That's why you even create a company. You create to change the world. Very idealistic, high risk, but you come in with that intent. I feel that what happens is circumstances subsequent to that then lead to you're determining whether you stay, whether you sell, whether you partially sell. It's a bunch of circumstances. It's luck. It's capital.
Yeah.
It's having the right team. All of those then influence your decision in what you do.
Yeah.
But I would argue that every founder comes in with the intent of
the best of the intent.
The best intent is that I'm building a company that's going to outlive me. That's my hypothesis.
Yeah. I mean, looking at hearing you, I agree. Yeah, it can't be any other way, because they can't build. They can't build if
you don't believe again that you're changing the world with what you have, you're not going to be able to build a great company.
Absolutely.
So I would think that it's with the intent to outlive your lifetime. But of course, if positive circumstances happen and it conspires that way, then you see the brands that get built over time.
Some of the milestones, some of the happy milestones for Waterfield, for your journey.
Many. Our first client. That was a very happy milestone.
Was it the Patni group?
No, this was a Chennai-based client.
Okay.
This was, our first fee-paying client.
Okay.
I think that's a very special moment. The other would be the first time I raised institutional capital. Actually, external capital, which is the Patnis. The day we hit $1 billion in assets under advisory, that was a big moment.
Which year was that?
That was in 2016, 17.
2016.
Yeah. Then the first time we raised institutional capital last year, that was a big milestone, because it just meant we were just shifting gears and we were now thinking about scale and growth. These would be the the big milestones. Or in fact, I think the other one would be the day we launched our program for women, Heritage, which was on International Women's Day 3 years ago.
Yeah.
That was very special because it came from a place where I felt that women were not being well served in wealth management. So that was personally very satisfying to me. So yeah, those are some of the milestones that we've
Lovely.
had.
Here, with regard to the Heritage program, right, I found that there were two things that you mentioned very specifically. One is literacy and the other is community building. That doesn't come under the other cohorts.
No.
And why?
Great question. Great question. I think it came from a place that, when you work with women, particularly in their wealth management, what you often see is a lack of confidence. It's not always, it's probably the single biggest deterrent. It's the confidence to make financial decisions, because there is also the fear of being judged if something goes wrong. And, finger pointing, saying, you did this, so you lost money, or, something like that. So I would say that the literacy part was specifically aimed at, could it be an enabler to build confidence for women? And that was why it was very specific in the proposition. You won't find it in the other propositions that we have, because in many of the others, it's basically men who are either the founders or the family businesses. Though, of course, that's changing, and 30% of India's wealth is going to be managed by women by 2030. So that's changing, and women inheritors is now getting larger. But even for women inheritors, the big issue is I am still dealing with a family business which can be still male dominated, and therefore I need to have a voice at that table. But for me to have a voice on that table, I need to be financially literate. And that's how the literacy part is a very important part of what we do for women specifically.
Understood.
It's important. It gives them the confidence.
And community building, Soumya?
Community. Community came from a place which was around more again what I was seeing, that you have all these old boys networks which operate at all levels. It operates in business, it operates as in professionals, it operates as founders, but there was nothing which was there for women. And I felt that it was very important that if Waterfield could create a community of women who were inheritors, who were professionals, who were entrepreneurs, then that would be a very powerful community. Because they have unique challenges, unique things they're thinking about, which they can bring to each other to help problem solve in some ways.
Absolutely.
So that community, it's in the early days. About 25% of our clients are women at Waterfield, but we think it's a growing tribe, and we want to increase,
engage and increase
the tribe, because these women are in positions where they can, over a period of time, influence. Because ultimately, what you want is women to be able to transition from just, you want them to transition to being stewards, and you want them to transition to being in places where they can influence outcomes.
Absolutely.
So if you look at most women's journeys, you'll find that they are savers. Then you want them to become investors, and we're on that journey right now. Investors then become wealth creators, and they create wealth and accumulate wealth. And then from there, they become stewards of wealth.
Understood.
So you want to see women go through
that journey,
roadmap and that route, because that last bit is what will then enable the systemic change and societal change that you can then unlock.
Understood. Very beautiful. Love the thought process.
Thank you.
Soumya, the other question, around being a founder is, we find a lot of women starting up in their 40s, at least now, a lot more than it existed. Or maybe I'll keep it, not gender color. I'll keep it neutral for now.
Yeah.
So one is you have mental clarity, a lot more clarity in this bracket. But how does physical endurance, how does all of that, match up to what you want to build and the empire that you want to create in that?
Right. No, I think I feel that starting out between the ages of 35 and maybe 40, 42 is great, because by then you have almost about 10 to 15 years of experience somewhere else, and that experience shapes you so that you don't make a lot of mistakes when you're doing or building your own company. But what it also does is it gives you 10 or 15 years to really go all out to build the next venture.
Understood.
If you do it too late, you may find that you don't have the physical endurance, which is a great question. I certainly know that the ability to do a lot more travel 5 years ago or 7 years ago was much higher than what it is today. And therefore, the physical endurance needed is a lot when you're starting up. So because you're constantly having to engage with different stakeholders, meet different people, and so forth. So I would think that it's for me the ideal age is between 35 and 42. Similarly, even people who we hire at Waterfield, if I was to look at leadership positions, I think the best age to hire for leadership is between 38 and 50, because they have the experience of having gone through wherever they were before, and they bring that experience in, but they're also very hungry at that point to be able to amplify all their learnings. So, and it gives them enough time. So it gives them 10, 15 years runway after that. So that's the really, I would think, the best time.
Golden period.
Golden period. Absolutely golden period.
Do you handle stress better as you age?
I think it depends on your mental makeup. I think if your mental makeup is such that you could be 25 and handle stress just as well as you're 60.
True. What is the core? I mean, since I'm just curious, when you describe a mental makeup, like how would you define that ideal mental makeup, Soumya? How can you handle something nonchalantly, or
I think positivity.
Positivity.
I just feel optimism, positivity. Coming back to belief.
Yeah, I believe. In my mind, it was belief.
So it's back to those same words. Again, can you look at the bright side?
Yeah.
And
you sleep it over and come back, and it's a better day.
Yeah. No, absolutely. I also have this. The other way I look at things is whatever happens for my highest good. Maybe it's a way to deal with the not so good things that happen to you, because you always say that, okay, I will live to fight another day, another battle. But maybe it's my way of rationalizing to say, good, bad, it's happened for my highest good. Perfect. I may not see it today. Something that didn't work out for me 3 years later will tell me why it didn't work out.
Absolutely.
But at that point in time, my way of rationalizing is to say, it happened for my highest good.
Interesting.
And that there's a power in the universe which is beyond.
I completely subscribe to that thought process, but it's marginally difficult to implement on a day-to-day basis.
Very hard.
So, Soumya, again, I'm just going to pick up 2-3 concepts that I was struggling to understand from a family office, from this structure. I heard you mention passion investing. You speak about the public, you speak about private, global impact, and you touch upon passion investing. To me, yeah, that was
So,
quite.
well, actually, people do. You could have a passion for art,
Mm,
and therefore you view that as an investment, which is for some people done exceedingly well.
mm,
You love art, and therefore it's a passion investment. Or someone likes good wine,
mm,
and they have this huge cellar in some ways
mm.
that, and they pick up wine because they enjoy good wine, and they also view it as an investment.
So it's low on liquidity, but something that's driven by what
Your
you
what you like.
your
It could be vintage
personality.
cars.
Mm.
It could be watches. It could
Understood.
be jewelry.
Understood.
But ultimately, it's, I think, something that makes you happy.
It makes you happy. Yeah.
But you're also viewing it through the lens of it is an investment.
Mm.
So it's something that you clearly love,
Mm.
but you're also willing to sell, because you're not buying it just to keep it.
Mm.
You're also buying it with the intent that possibly you would also be open to
sell it. So the next one, Soumya, was safety pool. Okay, one is safety pool, and the other that kind of intrigued me was luxury inflation or a luxury capped inflation.
Yeah.
How does that work?
So one of the things we say when you're investing, Vilasni, is that people always look at the absolute returns or the annualized returns, but they never measure the return in relation to inflation. So India, up until maybe 10 years ago, had actually double-digit inflation.
Yeah.
So it meant that if you were even earning, let's say, on your fixed income portfolio 7 or 8%, the real rate of return was actually negative because inflation was higher than what you were earning. It means then that your money is not growing. You're not getting the purchasing power of your investments. So we feel that when you're investing, it's very important to look at the inflation numbers against the investments that are happening. Today, the good news is that actually inflation is moderated.
Yeah.
So at a time, so when we initially started, when I was advising clients, it was very important for us to get the asset allocation right to make sure they had investments in spaces which were inflation hedged to a certain extent. So when you look at the safety pool and when you look at safety, you're always invariably tilting towards fixed income. And that fixed income meant that my interest rates that I was getting was not necessarily staying true to inflation. Luxury inflation was a little different. So it's really looking at what is the cost of, let's say, cars, jewelry, watches, which could be moving at a slightly different pace to what the rest of the inflation is looking like. Or your consumption, inflation to the extent of, your potatoes and tomatoes and onions and potatoes that you're buying every day. So it was important to differentiate that. If you looked at luxury inflation 10 years ago, that was sitting actually somewhere between 8 and 15%. So you were actually losing even more than you were actually making on your fixed income portfolio in your safety pool. Today, it's very different. Today, you have a situation where inflation has moderated to about 3%. I think that was the latest imprint that we got. They've also just done a change in the inflation basket to reflect to reflect those specific consumption themes and sectors, parameters that actually affect your prices. So now I think it's much more in the region of that 3%. So it's not as big a problem as it used to be, but certainly it's something that we always tell clients you must watch for. Because if inflation creeps up, it does come in and does cause your real rate of return to actually decrease.
Understood. Yeah, I mean, the first part of it was kind of obvious, but I was just very intrigued with luxury added to it.
It's quite different. It was quite different. Today, it's not as, today the cost of luxury goods, it was growing much faster. For instance, just post-COVID, you suddenly had luxury, the demand was there and people were also pricing higher.
Right.
That has now moderated because both the demand and supply are almost quite similar.
Understood. The other thing was cost of running a family office vis-a-vis the returns that one would get out of it, because you said that required prudence.
Yeah, I think what's important is that you have an investment portfolio, right? The investment portfolio generates a certain return. But in that return, there are also, you're also measuring the costs of running the family office, the cost of investment, brokerage, custody, transaction fees. And I think it's very important for families to actually put a cap to the, if my portfolio is X, then I should make sure that my cost of investment overall should not exceed, let's say, maybe 1.5 to 2 times or 2% of whatever is at X. So families of, obviously if the portfolios are larger, that number automatically moderates down. But today, do families actually calculate all this? Do they actually calculate, I've paid my fund manager this much, my advisor this much, my broker this much, the custodian so much? Because all this ultimately is also decreasing your
Coming
return.
from that pool. Coming from.
So ultimately, what are you getting in your hand?
Yeah.
Right? You may turn around and say that I've got 12% as my equity returns. But if I was to say, hey, Vilasni, you're add up all your costs of investing and it's maybe 2%, then effectively you have only got 10%.
So it's something like a NIM.
This is even before tax.
Yeah, understood.
Right? Take out for tax, even less. So somewhere I feel that we tend to get quite, we get very excited about the returns that we make without really looking at net of fees, post-tax, cost of investing. These are all important things for investors. It really isn't something just for family offices. It is as true for any individual, an investor who's making an investment, as it is for anybody else. But be aware.
So in all cases, it might not, or there might be a benchmark AUM or something where it makes sense to have a family office or have a setup.
I think it makes sense to have a family office only when actually it's not always just about the
returns.
It's not just the liquidity pool that you have. It's not always saying that I need a family office when I cross 100 million or I cross 50 million. You may also set up a family office because you fear for succession.
You mentioned that.
Worry that, your children may have a sense of entitlement. You may feel that the investments will not be well directed if there is structure is not brought in and the money will get dissipated, or you feel that there's an overt concentration of the investments into a particular area which may risk the capital for the family as a whole. So a family office is almost like the structure and the guardrails to make sure that wealth is preserved in the manner that the family would like it to, because families and family members are custodians of the wealth in their generation. That's all. So your priority is to make sure that you have passed down that wealth to the next generation sensibly.
Absolutely.
Family office allows you to do that. And that's the whole purpose of why. So it could be, you could even say at 10 million I need a family office.
Understood.
So it's not always about the
understood. But you need to have in mind the cost dynamics.
Exactly, because I decide to set up a family office. I need a place, I need the compliance costs, there are people costs, there are administrative costs of running the family office. That all has to get baked into the fact that, is it worth my while to invest in this cost in order to safeguard some of these? But then it also means it's coming out of, and it's part of my cost of investment.
Understood. The other terminology, I think, also comes from the very core of your value purpose is strategic philanthropy. I've, heard you mention it. Yeah. So I understand philanthropy. What is strategic philanthropy?
Okay, great question. Strategic philanthropy is where it links directly to the values of the family. So let's say that a family is let's say, in the IT business, right? And it believes that ed tech is extremely important in terms of setting up the infrastructure for technology to be an enabler.
Understood.
Right? Now, their vision then, in terms of the philanthropy that they want to do, is specific to ed tech, right? It's not just education, because education has so many different pieces.
Absolutely.
But it wants to focus on this one area, which it links back to its values of technology, because technology is what created the wealth in the first place, and it sees it as an enabler. So when we say strategic philanthropy, it links back to their business, or it links back to their values. So you will, for instance, they may say that I will also give scholarships for ed tech, right? It could be I provide the infrastructure for ed tech. It can say today that I will give scholarships for AI, right?
Understood.
Now, all of these are related, but it also relates to a broader education theme that the family wants to necessarily have. So it will not dissipate its energies and say, I will do healthcare, I will do arts and culture, I will do livelihood. It's very clear.
Very
Because
focused.
it wants it to be related very clearly to its goal and mission of what it believes is the area that it wants to focus on. Because philanthropy, at the end of the day, Vilasi, is very personal.
Yes.
Most people's philanthropic giving is a result of an incident or an experience or something that they've gone through that creates the relevance for their giving. So you'll invariably find that the families in IT are giving back through that lens, or the ones in healthcare or pharma are giving back to healthcare. So it's quite I've seen it. Yeah, it's quite nuanced, but very specific to an experience that they've had.
Yeah,
it's personal.
You bring out a point there, because I also wanted to touch upon your personal philanthropy goals. I see you wanting to, pay it forward in your own way.
Yeah.
So can you talk to us about that?
Yeah, I guess for me, two areas that are very important for me are education, and the other is mentoring. Maybe related to education in some ways itself. So I do mentor women in private equity. I support a platform called WinPE, which is Women in Private Equity. I've mentored 4 women so far in the last 5 years. We one mentee every year, and where the intent is one, just as we talk about the whole thesis of women in private equity, is that you need more women investors. So one of the reasons we find when you talk about women entrepreneurship is that why is it that such few women are funded? Why is it that we still have sub 5% as what goes to venture capital to women founders?
Women-based.
One of the reasons for that is the lack of women investors or people on the other side who invest into women-founded companies. So this one of the main goals of this group is to really have more women investors in positions of influence, where they then become partners in private equity firms, and therefore they can direct the capital. So for me, mentoring is one very important part of paying it forward. The other is just in terms of a scholarship that my husband and I recently endowed, which is the 6th Rhodes Scholarship for India. There was always just 5 scholarships. My husband's a Rhodes Scholar, and we both met at Oxford, and that experience was transformative for both of us. So we were very keen to have more Indian students have that opportunity. It is one of the best universities in the world today, and that experience can unlock so much for others. So we've endowed it in perpetuity now. It is endowed in the name of my great-grandfather, Sarvepalli Radhakrishnan, and my father-in-law, R. Govindarajan. So he was an IPS officer, and my great-grandfather, of course, was in
Amazing,
education,
yeah.
and Teachers' Day celebrated in his memory. So it seemed like the right thing that we wanted to do. And so for us, we know that education can be transformative, and we want to make sure that our giving is in that direction.
So inspiring, Soumya. I hope many of us pick up from this and pay back or pay forward in our own way.
So we've just identified the first scholar who's going up this September. So we're very excited about that, and then to hopefully have a cohort and a kind of alumni itself in this particular scholarship, in this community, to see what is it that they can do, for India. I think that's the real intent.
Lovely. We're also living in times that we spoke about, that inheritance is becoming higher. I think the generation now is going to inherit a lot more than possibly we did. So, do you see philanthropy playing a part in the young minds? Do you see any early seeds, or how does one build it into the generation?
So what's really interesting is that when family offices look at philanthropy, it's a wonderful way to introduce the next generation to the privilege that you have.
Yeah.
So a lot of parents worry about their next generation having a sense of entitlement, whereas when you bring philanthropy into the discussion, what you're actually doing is saying, here is capital, and here is capital if given to either to companies which are in the social sector or non-profits, then it's actually getting directed towards upliftment in some shape or form.
True.
And to have their children involved in seeing how money can be an enabler to uplift someone else is really the place where they feel it's a very good conversation to have with their kids. So then their children start realizing that they can use the capital that they inherit for the betterment of someone else. And I feel that's very powerful.
It is.
And it makes it so much easier for parents who have come into wealth to teach their children about what is privilege and what can privilege do and what can privilege enable. So I'm very optimistic that as you see more in people inherit, they will come in with a mindset that, given the country that we are, and wealth inequality in India is huge. 60% or rather 1% of India has 60% of India's wealth. So that 1% has a big role to play. To elevate everybody in some sense.
Absolutely. You use the word privilege because I see that even in your even in your thesis, even in your website. So use of privilege, you say, needs to be accounted for. So you touched upon it, but if you can just elaborate that a little bit more.
It's again maybe a lot to do with mental makeup. So the thing is that I do feel that we're very lucky in one sense to
live in the times that we are actually.
The fact that we have a roof over our heads, jobs that we can create, just financial assets that we have. Now the question is that ultimately it's ashes to ashes, dust to dust, right? So in your life, you were born for a reason, right? Make it count, right? So at least if you've been handed out all this, my great-grandfather, interestingly, suddenly come to mind, used to have this quote where he said, it doesn't matter whether you're born with a silver spoon or a wooden spoon, it's ultimately what you scoop from it. Doesn't matter. But can you make it count? And particularly if you do have, and you are born with the silver spoon, can you just
Make it count a little more.
a little more? Can you make it count a little more? Because
Yeah.
you've got a head start.
You've got a
almost.
head start.
Because you've got that head start. Don't let that.
Don't let the privilege
Don't
pass.
let the privilege pass. Don't let the privilege pass.
So coming back to you as a founder and as a company, there are two themes that I wanted to talk about: people and technology.
Yeah.
So, you spoke about identifying talent, identifying the talent pool at the right age,
Yeah.
etc. But how hard or easy has it been to get, people in this very specialized sort of business? And how is AI helping, countering?
Great questions. So we say in the wealth management business, actually right now, if you go to any wealth management CEO, they'll say the biggest issue for the industry is talent. There are just not enough people. And this is irrespective of distribution or advisory. Because we do have not enough people who've actually seen market cycles. So when you talk about wealth management experience, it's always related back to, have you seen, the COVID years? Have you seen GFC? Have you seen .com boom? Boom and bust, or demonetization? Now, each of these has created a kind of dip or a challenging period for investing. So when you look at today's talent, it's actually a little shallow. They haven't seen enough of these cycles or how to respond. So for instance, when something like COVID happened, that was not the time to panic. That was actually the time to be rational and say, this is an opportunity and I should be investing a little bit more at this stage, knowing that if you trace back all the different times when you look at market corrections and market dips, they've actually recovered in about 8 months, right?
Absolutely.
If you go back to every one of those, 6 to 8 months, it's come back.
It's all back.
It's all come back. So, but then if somebody told you that, you would then feel less anxious and you'd say, all right, let me put some of my money to work. So I think understanding that philosophy, psychology, then actually becomes
very crucial
and extremely important.
To the maturity of that talent pool.
And that talent pool right now hasn't seen all those dips. So hiring in one sense is challenging because one, you have to find the individual. The other is that the individual has to find the right cultural fit into your organization. That's probably true of any industry.
Yeah.
Maybe not unique to Waterfield. But in the early days, when you don't have capital, harder to find the right talent. And
Absolutely.
sometimes it's like, if you can't find the right talent,
you're not going to grow.
You're not going to grow. Then it's suboptimal.
It's a vicious cycle.
So it's like capital helps. Access to capital helps because you then can hire the right people. But then again, another really interesting kind of thought, or maybe just what I heard from institutional investors, is that don't always think that the people that grow your company to a particular time are going to be there till the very end. Because companies also change. Companies also evolve. They grow, they scale. So the talent that you had at one part of your journey, and there are some people who are great in that 0 to 1
situation. Yeah.
They just love it, because it's all heady, it's chaotic, it's messy. There are others who are very good when there's more structure, the 1 to 100 journey. So you will find as a founder, you yourself have to evolve to say that 0 to 1 journey had a kind of talent that I needed, but the 1 to 100 may look completely different. And you as a founder need to be able to adapt and to be able to find the talent for each phase of your growth. Absolutely. Is equally important. I remember in the early days, Vilasni, when people left the firm, I would feel very anxious.
I can imagine.
You'd feel, have I done something wrong?
Is
it
me?
Personal? Is it me? Have I, what have I done that this has to happen? But then you realize also, it's not always about you. It's also about their own comfort in that stage of your journey. And therefore, they may not be right for the rest of your journey. Again, going back to my philosophical, what happens, so your highest good.
Yeah.
So rationalize a bit of that, and you do realize, and I've realized now in subsequent years, that it is exactly that. Different
I hear you.
teams start operating at different phases of the company's
And what they had to
development.
build, they would have built.
And they built, and they
Yeah.
built great,
Yeah.
and it was
yeah,
great
yeah,
then.
Yeah. And the next you need somebody else with a
Somebody
different
else. But that doesn't mean you can. It can't be a revolving
Yeah,
door all the
I know,
time.
I know
but
what you mean.
But it is just, it enables you to think more long term about the company. It doesn't. You're not taking those short term
views,
views, because you're realizing that this is really getting built for the longer haul.
Absolutely. And what about AI in this space, Soumya?
AI. I'm very excited about AI. We've started using AI in the company, and it is going to disrupt. I mean, there is no two ways about it. Every industry, it'll disrupt the way we work. It will make us, I think in wealth management particularly, it will make us much more efficient, because ultimately AI is very good where there are large reams of data.
Yeah.
And public markets investing has large reams of data.
Right.
And you want to make sense of the data.
Right.
So AI, what would have taken analysts 3 days, 4 days to do, you can do in minutes. So it's an enormous enabler. It will bring in a lot of efficiency, and I am personally excited about that. I do feel that it will. So my view is, is that right now we are flooded with intelligence, but wealth management also needs wisdom and judgment, and that currently a human interaction brings. So the future, as I see it, is a wonderful hybrid combo,
blended,
which is really AI, which is making you so efficient, and all your compliances, your efficiency, your sorting through the noise, your handpicking and curating the smaller investment groups for people, personalized to you when what you want. That's all going to happen. But to bring in that judgment, to bring in that element of, Vilasini, you are unique. Your risk appetite is unique. Your liquidity requirements is unique. Your values are you. Can those investments reflect these? I think that's where the human intervention will come in. I'm very excited for the future. I think it's going to be such a game changer. But
any instances of countering hallucination, anything early on?
I think you've got to deal with that. So it's almost like you're running two parallel processes. But what I did read, and which is probably true, is that sometimes and even if you use AI, you'll see that the first 3-4 questions get answered well. The moment you start going into,
when you confuse the model,
then it becomes that's when it starts hallucinating. But then at that point, you also know it's hallucinating, and then you say, look, I think this answer is wrong. And then it'll quickly go and change things. But it's about, but I am personally excited about what I can do. I think we can do a lot for women, specifically, because I do feel that the whole piece on literacy that we spoke about today, women can actually learn more through this tool. They don't have to go and sit in front of somebody through,
you ask intelligent questions and it'll
give you the answers. It'll help you rebalance portfolios. It'll tell you about, how to create wealth in some ways. It'll help you, for instance, if I'm the founder of a company and I say that all my money is currently in the equity of my company, and I want to fund a scholarship 10 years later, it'll help me about the kind of stake sale that I have to do in order to generate that ambition to fund a scholarship 10 years out. It'll do this for me in minutes.
Exciting times.
Very exciting. I will put in, let's say, at this valuation, how much do I sell? At this valuation, how much will I get? So it's just such an enabler.
It's an enabler.
It's an enabler.
And it's democratized, data and knowledge like nothing else.
But again, I think it's, but for us as wealth managers, there are people who ask me, is it going to take your job away? I don't think so. I don't think it's come to that stage. It has definitely come to a stage where it can take out all the
less intelligent, more repetitive,
the
efficiencies.
But when it comes to the human judgment, I think that's where we still have some relevance.
And hopefully for some time to come.
Hopefully, yes.
So we've done a lot of shop talk. I'm going to do a quick rapid fire with you.
Sure.
Your favorite book?
Blue Ocean Strategy.
Okay. Your favorite, what's your content diet look like? What do you watch?
OTT, which is Netflix. A lot of Netflix.
Any favorite show?
What I just saw, Ted Lasso. Fantastic. It was great.
Okay. How do you unwind, Soumya?
Listening to music.
Okay. What's for genre?
Love English music mostly because sang in many choirs when I was younger.
Okay.
But not necessarily listening to Western classical, but more just
contemporary
easy
English.
Easy listening.
Nice. So, favorite holiday destination?
Greece.
Okay. Okay. Your personal investment philosophy?
The power of compounding.
Did you start early, Soumya?
I started really early.
Okay.
Because I think, Grinley's, the branch that I was posted to, was at 90 MG Road. It was just next to the stock market. We would, actually at that time, you didn't have DMAT. You had to fill out applications on this broad sheet in order to apply for public issuances. And in those years, ICICI Bank had come out with an IPO, HDFC Bank had come out with an IPO.
Nice.
And I remember filling out an application and putting in 10,000 rupees, got an allotment, cheered wildly, still hold those investments.
Lovely.
And that's where I think the power of compounding really helps.
Yeah.
Because you see that, just don't do anything. But if it's a good stock and you've chosen well, then just enjoy the ride.
Yeah, absolutely. Do you manage Mukund's investments?
Yes.
Okay.
I do. Yes, I do.
What's the part of the job that you love the most?
Meeting people. I love that.
One part of the job that you don't enjoy?
Too many internal meetings. Or too many meetings which can,
drain you at some level.
Yeah, suck out the time. That's what I don't enjoy.
If not for private wealth or family office, what do you see yourself to have done?
Oh, I'd have been a designer. I just love interiors. I would have done interior design. Even now, if I can lay my hands on a book on interior design, I'd spend hours reading it.
Oh, nice.
I remember actually when I think I finished a fundraise and Mukund actually brought me a whole bunch of books on architectural design. Said, here, unwind. And I said, yes, great. This for me is really...
Soumya, you've navigated through a fairly male-dominated sector. Am I allowed to say that? I'm not sure. But, what were some of the barriers that you broke and what are some of the barriers that still exist?
It is a male-dominated sector. I think that's still true. I sometimes think I had great mentors. I was just very lucky. The breaks that I got, the people that I worked with, and maybe a part of what I want to do in terms of mentorship as well is to help others because I saw what it did for me. Again, same, pay it forward if you can. I think that's something that is very important. I think particularly in financial services as well. They say that Madeleine Albright actually had a saying that there's a special place in hell for women who don't help other women.
Oh, really?
She said this. I do sometimes think that women actually can be the worst for other women in organizations. I wish that we could overcome that and really encourage potential where we see it. I don't think enough women do that. Even when I look back on my own career, it was the men who helped. It was not the women. The women actually put you down. So I feel we must change that. More women need to stand up for other women and help them grow and recognize their true potential. Where it comes to entrepreneurship, I do feel the biggest challenges are around capital, the access to capital. Women will build, even men will build, but without and it's more difficult to access the capital for women.
Yes.
And this is not just financial services, this is across the industry.
Yeah.
Because that, and most times it comes down to the confidence, the diffidence, am I ready? Will somebody fund me? We take it very personally if somebody says no. I think that all that baggage needs to go out of our minds. So my sense is that those capital for entrepreneurship and mentoring will change. I mean, there are so many others, but I would just think that these two can amplify. And I think one of the things we also do at Waterfield, which is particularly good, is around second innings for women who take career breaks. We actually, I will say that most of our senior women at Waterfield have all taken career breaks and we've brought them back into the workforce.
Very good.
And we've loved that because I think a lot of large organizations, what they get wrong is that they're not geared to get women back into the workforce after a work break. Because they don't recognize that women are going through a lot of issues. When they're coming back into the workforce, they've seen their peers already move up maybe 1 or 2 notches. They're also dealing with what their home environment, whether it's their kids or elderly parents, or the reason why they've taken that career break. So how do you just bring them back?
Blend it all in. I think that's where they struggle.
And support them.
And support them and give the opportunities.
The opportunity because they have the ambition.
Yes.
So you need to
nurture
the ambition. You can't douse it.
Yes.
So absolutely. I feel that is can be very empowering for women.
Absolutely. What is one advice, Soumya, you feel you would have benefited if you had gotten it earlier in your career?
I think I would have said to define my own success metrics. At least when I was younger, we related success to
the milestones,
promotions, to growing in your corporate career, to growing in terms of materialistic outcomes. I wish somebody had told me it really doesn't matter. It doesn't matter at all. Build for your own self-worth and your happiness.
Absolutely.
And define success on your terms. And it's perfectly okay. It's perfectly good. I just never heard that. Though it was probably there. It's just that I didn't relate to it.
We had to realize it ourselves.
Yeah, exactly.
I mean, nobody actually...
You learn
it you learn it through experience. Yes.
That it really doesn't matter.
But I'm so glad you're saying this on this forum because I think many people should hear it and internalize it.
It doesn't matter. It doesn't matter at all. Because your metric of success is very different from someone else's. And you should be happy with whatever you've achieved.
Absolutely.
In whichever way.
Absolutely. Which is very special. Because there's a friend of mine who always says they didn't take into account the circumstances.
Exactly.
So that makes a huge difference.
Huge difference as well.
Yeah. So what about your fitness? What about your discipline? How do you cope? I know you play a lot of badminton.
When I was younger.
Okay.
Now the knees will not let me. So I've now changed to pickleball. Which is but pickleball only when, so we have a home in the Nilgiris. So that's where we would I don't have the time in Bombay to do that. But what I do, at least in terms of fitness, is just I do a morning walk, 45 minutes of that. That's me time. I don't take my mobile. I just meditate. And the other is yoga in the evenings. I do 45 minutes of that. I've now carved out an hour and a half for myself.
Very nice.
I'm an early riser, and ultimately it's time. It's very easy to turn around and say, I don't have the time. I again think it's a mental state. You have to tell yourself, I will make the time. And once you do that, then things fall into place. Yeah, but it's the discipline of making the time. Time is perhaps our most precious commodity that we have. So
use the privilege well. Again.
Use the privilege. Use the privilege well.
Yeah, use the privilege. Absolutely. Thank you so much, Soumya. Thank you for all this wisdom. I feel incredibly honored and privileged to have had this conversation. Do you want to end with a message for the VWomeProject viewers?
Thank you. Thank you first, Vinasni, for having me. I think I've just so enjoyed this conversation.
Thank you so much.
Perhaps I think the one message I'd probably leave is just, as women, we make choices. And those choices have good and bad outcomes. But I would say that don't regret the choices you've made. Because if you do, you will carry a very heavy burden and guilt. So free yourself of the guilt and also be kind to yourself.
Absolutely.
I think that would be the one message I would leave.
Thank you.
Thank you.
Thank you so much.
Pleasure. Thank you.
Thank you. Thank you so much for listening to yet another wonderful episode from VWP. It gives us enormous pleasure to create this content for you. If you enjoyed listening to the conversation, please hit the subscribe button and do let us know your favorite moments from the conversation. We would also love to hear if you have any guest recommendations for us. Of course, please don't miss our shorts section where we have our favorite moments compiled in bite-sized formats for you. So keep listening, keep growing, and do subscribe to the VWomeProject. This is your host, signing off. Thank you.